babysit them, but just, have the
culture
camaraderie
and
there.
having like the conversations, and like every transaction is so different that
Yeah.
it's helpful, especially for like newer agents. So, all right, I'm gonna make us live on Facebook.
Located right downstairs from Wiemeyer Dentistry, we will be fulfilling a need in our community for complex dental care. If you're frustrated or overwhelmed with your current dental situation and are in need of a dental plan of action, we are the place for you. From dentures to dental implant reconstructions, we will be able to simplify the process for you and exceed your expectations yet again. Call us today to schedule a consultation, 781-934-2300, or find us at contemporarypro.com. That's contemporarypro.com.
Yeah.
And taking a look at sports, a loss for the Celtics last night at the Garden. They fall to the Bulls 128-114. Celtics face the Magic in Orlando. That's tomorrow night at 7. Game 6 of the World Series tonight in Houston. The Astros host the Atlanta Braves. The Braves lead the series 3-2. Game 6 tonight, 8:09. The Bruins, they're off until Thursday. They host the Detroit Red Wings. Puck drops at 7 o'clock. Meteorologist Rob Gilman's up next. His latest forecast, sponsored by Brennan Smoke Shop. Locations in Plymouth, Pembroke, Brockton, Wareham, Raynham, Taunton, Stoughton, New Bedford, Weymouth, and now in Hudson, New Hampshire.
Hey, it's Jeff from Brennan Smoke Shop. I know a lot of companies out there.
Sharon, can you hear me? It's George.
Their positions. Well, we're not one of them. We don't have any positions because our squad is full. My people came right back to work after quarantine, and they've been here ever since. Vax, no vax, my people don't care. They love what they do, they love doing it for you, and I love them for it.
George?
Brennan Smoke Shop is a small family-owned and operated chain.
David, we
my
can hear you.
employees are my family.
Awesome. Gonna begin
Brennan
shortly.
Smoke Shop family. This year, a special super-duper happy Thanksgiving to Chris, Mike P, Justin, Hannah, David, Brady, Jen, Linda, Amy, Carrie, Thomas, Oren, Rachel, Kiara, Katrina, Mike M, Jane, Jess, Jackie, John Paul, Jason, Heidi, Johnny, Jeffrey, my wife Mal, Mom and Leo, and last but not least, our new addition to the squad, Joshua in Rainham. Brennan Smoke Shop, the best smoke shop in Massachusetts and New Hampshire. Customers must be 21 years of age or older. Proper ID is required.
Some cloudiness has moved in, and as we were expecting, that'll bring a spot shower, even a bit of rain, especially from Plymouth to the Cape. And then late tonight, clearing, a low of 32 away from the coast, down to Boston near 39. Quite a cooling trend heading toward the weekend. Tomorrow, even with sunshine, the high 51. Tomorrow night, clear, a low of 28. 36 downtown in Boston. Thursday, again, that frosty start. Sunshine, some clouds will move in.
1, 2, 3.
Move out on Friday. Highs near 49. For W8TD, I'm meteorologist Rob Gilman.
Right now looking at 49 degrees outside our South Shore studios. 6:13, that's local news. I'm Christine James. Stay tuned for Talk Real Estate with Sharon McNamara right here, 95.9 WATD.
First time I called.
Now, Talk Real Estate with Sharon McNamara, sponsored by Boston Connect Real Estate Services.
Hi, I'm Sharon McNamara, and you are listening to Talk Real Estate Roundtable. Let me share a little bit about my background before we get started. I am the broker-owner of Boston Connect Real Estate, a boutique real estate firm that is home to over 30 real estate sales and marketing consultants who service home buyers and home sellers throughout Boston, the South Shore, the South Coast, and Cape Cod. Our firm takes pride in assisting our clients in the next chapter of their lives by taking a holistic approach to their real estate endeavors. We believe that every move should be a moving experience. Every week, my real estate team member Mary Baker and I, along with the director of Boston Connect Real Estate, Melissa Wallace, provide you with our unique marketing approach to selling homes.
Yeah, I lost video. Are you still there?
In navigating the home buying process. We like to mix it up sometimes, so not only will you hear our perspective on real estate topics, but you will hear the expert thoughts and opinions of some of our real estate agents at Boston Connect Real Estate and the preferred professionals that we trust. Be part of our roundtable. If you have any questions during the show, please call 781-837-4900. We'd love to talk real estate. Follow us on Facebook, Instagram, and wherever you listen to podcasts at Talk Real Estate Roundtable. If you would like a one-on-one consultation with me and my team or one of the dedicated agents at Boston Connect Real Estate to discuss your real estate needs, you can connect with us at bostonconnect.com or 781-826-8000. Now, sit back, relax, take good notes, and let's talk real estate. And you are, of course, listening to Talk Real Estate Roundtable here on WATD. And we have George at WATD at the offices there. How you doing there, George?
I'm doing great. How about you?
I'm doing better now. Did you almost have a heart attack there?
No.
All right, we're back on track here. And I have Melissa Wallace is going to be with me tonight. She, of course, is my co-host. She is our everything here at Boston Connect Real Estate. And she is just going to get us up and running on all of our Facebook pages. So if you saw my post earlier today, I was giving little hints of what we're going to be doing tonight and who our special guest is going to be. And I'm really excited to have him. We've had him on our show before. We've actually probably been and done some stuff together on McNamara Money as well.
Yep,
Yeah.
absolutely.
Good.
Thanks for having me, Sharon.
Yeah, and thanks. You did this like last minute, which was, I just love that people will do that. I was just like, yeah, he's all in. So
Yeah,
I have
absolutely.
David Tourtillott here with us from Homestead Mortgage. So everybody knows you as the reverse mortgage guy. And I was doing a little research for our show tonight, and I noticed that that Homestead, obviously I've heard of Homestead and I see Homestead, I see the pre-approvals come across, but I had never asked you before if you do, regular loans.
Right.
And the answer was,
The answer is no. I used to. I got in the business in 2002. And then, as I mentioned earlier, I wrote my first reverse in 2005. And then I was doing both up
Mhm.
until about 2009. And then I transitioned over.
okay,
I like traditional mortgages and did pretty well.
yeah,
But my passion is reverse mortgages. I
Yeah.
love the demographic.
yeah,
I like what this does. I always say if everybody knew what I knew,
yeah,
being people 62 and older,
yeah.
thousands of seniors would be doing this loan. They just
Mhm.
don't know what I know. And that's the challenge.
And that's one of the reasons why I did bring it on. I did bring it up today is because, I have several clients in that demographic, and I've been noticing myself as I'm going out to do an analysis for them. They're super excited about what the value of their house is. But then when we look at the opposite side of, okay, we sell your house, now what?
Yeah.
That becomes a bigger challenge, because where do you go? What do you do? And a lot of times people don't want to go with family. They don't want to have an interim place. A lot of people are afraid to put an offer in on a house before they have their house sold. So there are a lot of variables that we've been talking about forever and ever here on the show. And you can see our past shows. You want to tell everybody where? Are you putting us everywhere?
I
on
am,
Facebook?
yeah. I can try to multitask. So you can go to talkrealestateroundtable.com, listen to any of our past shows. You can go to your podcast app, whatever that may be, Spotify, Apple, whatever, all that stuff. Podcast app. And type in Talk Real Estate Roundtable. Or because we're so famous and cool, you can just type our names.
You guys are celebrities.
Yeah. Well, that's what I said in my little intro that I did today when I went online to do my little thing. And I was like, you're sort of a little bit of a celeb yourself. I'm bringing in all the big wigs over from WATD last week. We had a great show.
Family. Right?
Yeah, it
Seems
is
like
a
a family.
It really
does.
is a great family. And I want to, and again, everything that I talk about on the show is I'm very transparent. I'm very, very genuine about my feelings about, the guests that I invite on. It's very far and few in between, because I feel as if I'm going to stamp your services with my name attached to it, then you better be damn good. Right.
Yes,
So
I get that. And I appreciate that.
Yeah.
You do that.
Yeah. And
I do
I
the
would
same
never.
thing,
Yeah. And I would never. And I mean, and this is one of the first things on my agenda was, let's discuss how I remember this being such a voodoo topic.
Yeah.
And it was so, it had a negative sort of underlay to it. Do you want to sort of describe why it
Yeah.
did and why it's really not that?
Yeah, exactly. So believe it or not, the first reverse mortgage was written in 1961
Wow.
for a woman in Port Maine.
Huh.
But the mortgages back in the 60s and 70s, we refer to them as legacy reverse mortgages. They were
Mhm.
unregulated.
Yep.
So that was the wild, wild west days where, banks came up with their own concept of a reverse mortgage, but there was no way to insure it.
Mm-hmm.
So if the person outlived the loan, the only thing the bank had
Mm-hmm.
was the house. So when people say the bank owned the house, they're pulling those stigmas from the 60s and 70s.
Mm-hmm.
So it wasn't until the late 80s that FHA and HUD said, hey, we like that concept,
Mm-hmm.
but let's tweak this concept.
Mm-hmm.
Let's regulate it and let's federally insure it and back it. So there's never really been a problem with the FHA loan. It's been around for 32 years, but all the stigmas were pulled from the 60s and 70s. So, I mean, the loan was put in place by FHA and HUD in 1991.
Yeah.
It was released and enacted through Congress in 1989. So there was problems, even with this loan. And it was never the loan that was the problem because it's backed and insured by HUD, the government. It's a non-recourse loan. All that means is no one's liable for the debt. The estate is not liable for the debt. The estate gets any extra money if the house sells and satisfies the lien. But there was cross-selling.
Yeah.
So there was, financial planners and elder law attorneys in cahoots with loan officers like me.
Yeah.
Not me per se, but
Yeah.
like me. And they were setting these loans up and selling them to the wrong person.
Yep.
And then the financial planner or the estate planning attorney would say, hey, now you have the money. Let's invest that reverse mortgage money, or let's put an estate plan together. And I know that because a couple of the disclosures that they sign at application refer to that.
Okay.
Are you doing this loan as part of an estate plan? Are you planning to invest any of your money from this loan in financial instruments? So anytime you see a disclosure like that, that was a problem of the past.
Yep.
So 32 years later, there's way more safeguards with this HECM. HECM is the FHA reverse mortgage. That's its name, Home Equity Conversion Mortgage.
Okay.
So when everybody's out online, they see this acronym HECM.
Yeah.
It's just its formal name.
Okay.
So 32 years later, there's counseling in place. That's a safeguard for the senior. It's the very first thing you can do if you want to formally move forward, and that's done with a neutral third party. So that's a way of saying, hey, Dave does this for a living. If you guys sit down and this seems to be a good option, well, before you move forward with Dave, you're going to sit down with a neutral third party. And so that's just a protection. So there's so many more protections now, Sharon. And this financial assessment, which we can talk a little bit about, which is just really, we do look at income and assets now, not the same way as you do on a regular mortgage, but it's to protect the senior from not doing a reverse and burning through the money and making sure that it's a long-term solution, not a short-term solution. So it's a very safe and transparent loan now. Not saying it's for everybody, but it's for a lot more people than you think.
And well,
They
and
just
that's
don't
one
know.
of the things that I sort of entrust in you is that I feel that if I do send a client to you and it isn't the right product for them, that you're going to be very honest with them and tell them that it isn't. So I'm hearing a little feedback. Are you? I don't know if
Yeah, a
it's
little
from
bit.
George or what's going on there.
I do. Can I, so I hate the phrase like dumb it down, but like I've been in this conversation a few times. You've been on the show before, and honestly, for some reason something doesn't grasp in my head. So I just can we just go over like what is a reverse mortgage?
And I'll dumb it down. You know what a mortgage is, right?
Yes.
So it's a mortgage, and there's two ways to use it. If you take it on the house you're living in, you're refinancing the house and using this mortgage. So we've all refinanced in the past. The process of taking this out is identical. So you sign a loan application, there's an appraiser that comes out, and then there's a closing and the title of the home stays in your name. The only difference is this mortgage, you have to be 62 or older to take it out. If you're less than that age, you can't take out a reverse mortgage. And then on top of that, because it's for 62 and older people, this mortgage does not have a payment obligation. All of the mortgages nationwide have a payment. We all have to make our mortgage payments in the first of every month without any exceptions, or you might face foreclosure if you skip several payments. This one does not have a payment obligation. You can make payments. So did I dumb it down? It's a mortgage. It just happens, and it's an FHA mortgage. You guys have closed homes with FHA buyers, right? Same agency. It's just for older homeowners. But the process of taking it out is the same as every other mortgage. There's a couple of things, though, that are different. This mortgage is backed and insured by HUD and FHA. On the traditional FHA mortgages that you've done, those have payments. So they're recourse loans. And recourse just means you make the payment, you keep the house, you don't make the payment, you might be facing foreclosure. Reverse mortgages don't require payments. And there's a fee that's paid as part of the closing, which is why they're more expensive. It contributes to the insurance fund at FHA. So that makes the loan non-recourse, and that just means that the loan.
You glazed over.
the-
I saw her going. All right, let me stop you for a second. Okay. So to all of our listeners on WATD, you are listening to Talk Real Estate Roundtable with Sharon McNamara and Melissa Wallace. We gave Mary the night off tonight because we have another co-host in with us tonight. We have David Tourtillott, right? Did I say it right?
Yes.
Tourtillott from Homestead Mortgage with us. We're talking about reverse mortgages. So if you have some questions, you have some experience, we'd love to hear from you. So call the studio 781-837-4900. George will pipe you through to us. All right. So this is what we're discussing tonight, folks, and you can also watch us on Facebook and everything else. What we're discussing is with everybody having more equity right now, because everybody's value did go up based on what happened this past spring. Is it better for people to think about selling their house and buying another one, or taking some of that equity from, that's basically what they're doing. Is it sort of a different way of saying an equity line?
Yeah. So if someone's taking out a reverse mortgage and they're 62 and older, what they're doing is setting up the loan, and the loan's allowing them to access some of their equity.
Okay. So we have
in cash.
We have a 62-year-old couple. They're both 62. So are they both on it?
Yes.
Okay. Now we have a 62-year-old and a 59-year-old that are married.
Right. The 62-year-old is the borrower.
Okay.
The 59-year-old's not a borrower.
Okay.
That's going to be a non-borrowing spouse.
Okay.
Which just means they're not a mortgagor.
Okay.
But we use their date of birth to calculate how much they qualify for.
Okay.
Because they're married.
So if the 62-year-old should pass, the 59-year-old is responsible for any money that they used?
Nope. The 59-year-old can stay in the house after the 62-year-old passed, so long as they're still married. At
time of death.
That time of death. She or he's still living in the house.
Yeah.
And they can handle paying the property taxes and keep the property insured thereafter.
Okay.
The loan won't become due if they meet that criteria.
Okay. So now, okay, so we got that part. Now we have a home, the 62, let's just say, just to make it easy, they're both 62 and above. They have decided that they have no mortgage on their house, but they're basically living off of their Social Security and a little bit of retirement, but they don't have anything extra to maybe do trips or to do things around the house. I don't know what exactly we can do. I know we have this conversation a lot, and I don't know why I always forget, but that's why we have people like David in our life.
Hey, Melissa or Sharon, I have a question from a caller.
Okay, perfect.
Well, they don't want to be on the air, but I do have a question from them.
Okay, let's hear it.
So Pat wants to know, what is the interest rate for a reverse mortgage over age 62?
The interest rates are, how can I dumb this down? So interest rates very much like a home equity line of credit. These are open-ended loans. There are fixed rate reverse mortgages, but if she wants to know the answer to the question, on a fixed rate, you're around 3.5%. And if you're on a variable rate, you're about 2.25% right now at the moment, but that's a fluctuating rate.
Okay.
It's a little more complicated than that, but she wanted to know what the rates are.
Say that one more time, because it sounds like so echoey. Sorry. Go ahead. Just say it one more time.
So the interest rate on the fixed rate reverse mortgage is somewhere between 3.25% and 3.5%.
Okay.
And then the variable rate reverse mortgage, which is about 96% of all reverse mortgages nationwide, it's variable rate.
Okay.
So right now it's about 2.25%.
Okay. So the difference between somebody taking out a reverse mortgage and somebody just saying, I'm just going to go get a home equity loan is what?
So if you're 62 and older, right?
Yeah.
When you take out a home equity line,
yeah,
the bank is lending you money based on your monthly income.
Okay.
So the amount of the line of credit, if you only have $2,000 a month in Social Security income,
yeah,
you might only get a $40,000 or $50,000 line of credit.
Okay.
On a reverse mortgage, we don't look at income to determine the loan amount. We look at the age of the youngest homeowner and the appraised value. So just if someone's 62 and they have a $500,000 house, that equation is 50%.
Okay.
So they could get access to a $250,000 reverse mortgage. If they go to a local bank and they have $24,000 a year in Social Security income only, they might get only a $30,000 because the bank qualifies them based on their
Their
monthly
income.
income.
Okay.
So you get a lot more money, get more access, plus you don't have a payment when you start drawing from the line of credit. A home
Okay.
equity line, when you draw from it, you have a payment.
Yep.
It's interest only, but it's a payment.
Yep.
Plus the home equity lines of credit expire in 10 years.
Okay.
So if someone's 62 and they use the line of credit and now they're 72 and that expires, I get these calls a lot. The bank turns the balance into a 20-year mortgage, principal and interest.
Oh,
So their $100 a month interest only payment now could be $500 a month.
yep.
And
And that's a big difference.
It's a big difference. And they've gone to the bank and said, hey, it's expired. Can I just redo it? No, I'm sorry, you don't qualify.
Mm,
So on a reverse mortgage line of credit, it doesn't expire.
okay.
As long as you're living in the house, you have access to that line of credit. It
Okay.
doesn't expire in 10 years. If you're living in the house, you're paying your taxes and insurance,
Mhm,
that line of credit is available and it grows.
mhm.
Not to throw a,
Yeah. This is a good interview for you because like we really don't get it. So there are people out there listening who don't get it. It's your lucky day.
Two
that's why I
questions.
only do these for a living.
Yeah.
Complex.
It's-
but they're really
yeah.
not complex because it's a mortgage.
Yeah.
When you boil it down, it's a mortgage.
Mhm.
Go ahead.
My first question is, okay, so say you're over the age of 62, but you do owe a lot on your home for whatever reason, can you still get a reverse mortgage?
Yes.
Or so is it sort of like a way to like not feel like you're drowning?
Yeah, so let's take an example. Let's say someone's 62, they have a $500,000 house, but they have a $200,000 home equity line of credit balance.
Mhm.
Okay, so they qualify for 50%, remember?
Yeah.
50% of the value. So that's 250. So they have
Mhm.
enough to pay off the $200,000 home equity line. So they could transfer the home equity line, refinance it into a reverse mortgage,
Ah.
relieve themselves of the payment because they transferred it to a reverse mortgage, which does not have a payment.
Mm-hmm.
So you don't have to have your home free and clear to qualify for a reverse mortgage. You do need somewhere about 50% equity though. So if you have a $500,000 house and a $350,000 mortgage,
You won't
you
qualify.
won't
Mhm.
qualify unless you're older,
Okay.
because the older you are, the more you can borrow.
Okay. So with that other example that you gave that with Melissa's question. So if you have, you owe $250,000 on an equity line of credit and you get a reverse mortgage for 250, you pay that off.
Mhm.
So where is that 250 that you owe? It's just a mortgage. So you're not paying on that monthly. So what happens to it? You
It sounds like free money.
yeah, the
How do
bank,
you-
the bank's just waiting for you to die and you sell the house.
Think of it like this. So I have a mortgage with Chase,
Yeah.
right? So
God bless you.
I have a mortgage with them,
Hmm.
but the only difference is if Chase called me and said, hey, Dave, you can stop making payments for the rest of your life. We'll just add the interest, unpaid interest to your loan balance. That's why they call it a reverse mortgage. The balance of a reverse mortgage goes up every month.
Okay.
Mhm.
The balance of my Chase mortgage goes
It's
down.
go
'cause I make a
down.
payment. So if you're not making the payment, they defer the interest.
Yeah, it's starting to make some
So,
sense.
so when the
That's why it's
house
called the
goes
reverse.
to be,
Yeah.
so when the house comes time to the house being sold, so maybe you passed away or whatever, and now your family has to sell the house, you have to pay the reverse mortgage off, but it could be higher than what it is. Okay, I'm getting it now. I'm starting
It's
to get
more
it.
than the 250 because of the interest. So if
But
it
at
was
that
10
point,
years
it's
of
not your
interest-
problem. It's your family's
Yeah.
problem.
And it's not even the
That's the
family's
right.
problem. Here's the worst case scenario. If someone
Yeah.
takes a reverse mortgage out and they have a family of children, and
Mhm.
usually the children are there when we're talking about this.
Mhm.
Mhm.
The worst case scenario is if their parents live a long time
Yeah.
after
Yeah.
they take the reverse mortgage out.
Because then you
and the
owe
balance
more.
Exceeds
Yeah.
the
The
value at the
value.
time
The
they pass
value.
away. The kids still inherit the house, but they might have inherited a house that's got no equity in it.
Yeah.
But the government doesn't go after them and say, hey, pay up. They just say, I'm sorry, there's no money left.
Yeah.
FHA and the lender work out that shortfall behind the scenes. And the real estate agent actually gets paid their commission, even if
Really?
it's upside down. But there's an insurance fee that's paid to
Mm.
allow all this. That's
Okay.
why they're more expensive. It's 2% of the home value.
Okay.
So it's 10 grand
So-
on a $500,000 house that's rolled in,
Yeah.
paid one time to HUD. So
But
that kinda
somebody could
clears.
be at 62. They could live until I just met somebody at the Christmas tree shop the other day and she told me that her mother just turned 99. I met her in the bowl aisle and her mother just turned 99.
Wow.
So, I mean, that's sort of risky for the bank, no?
Well, that's not risky for the bank because they don't have enough life left in them for the loan balance to defer. So in
Mhm.
other words, if that 99-year-old wanted to take out a reverse mortgage and her house is worth, or his was worth 500,000, she or he gets to borrow 75% of 500,000 because of life expectancy.
Yeah,
So
but
there's still 25% equity in the house and she's 99. If she took it all,
But what if she took it out when she was
yeah,
62?
what if she took it out
when
when
she
she was
took it out
60?
when she was 62, she'd only get 50%.
Oh,
the
yeah, yeah,
equity
'cause
left
of
in the house is,
different-
see, the younger you are, the less you can borrow
Mhm.
because of life expectancy.
Okay.
The older you
Sharon, I have
are,
another question for you.
Okay.
Okay.
Perfect.
The same caller, Pat. He wants to know what is the basic closing cost for those over 62?
Okay.
yeah, closing costs are not determined by age, they're determined by home value because HUD sets all the cost as a percentage of the home's appraised value. So the higher the home value, the higher the costs. To give the gentleman an answer, so if he has a $400,000 house, that's 8,000 for the insurance, 6,000 for the origination, probably about 17 grand of rolled in costs. If he has $1 million house, he's probably closer to $25,000 of rolled in costs. If you have a $200,000 house, it's probably closer to 10 or 12,000.
But it's nothing out of pocket,
It's
right?
nothing out of pocket. It's
It's
taken
just
off
added,
the top of
yeah.
the loan. And then the rest of the money just becomes liquid cash equity to the borrower if they need it, or they got to pay off liens on the property.
So if you, let's just say, you write it down because I can tell you have a question.
Oh yeah. No, I can remember.
So let's just say you don't have any mortgage on your home, okay? And then the value is $500,000. You decide to get $250,000 cash and you just want it in the bank, right?
Yeah, well, it's a line of credit.
A line of credit.
So it
Okay.
just stays in your house, but it becomes accessible to you. You
Mhm.
just, hey, if I need 10 grand to fix the roof, I reach into my line of credit. You fill out a form and then it direct deposits into your checking account.
Okay.
Now you've borrowed the 10,000 and interest defers on only what you borrow,
Okay.
not the balance in the line of credit that's available.
Ah,
All right. So if you just kept that 250 in there forever, like there's no
The
accrued
closing
interest,
costs initially.
just the closing cost.
Just the closing costs. So,
No,
you
this
know,
is sort of a no-brainer.
right. So if you get a $500,000 house and let's say the costs are, say, 17,000. So you take 17 from the 250
Yeah.
and you're left with the rest of the line of
Yeah.
credit unborrowed, but you're deferring interest on 17 grand at 2.5% annually.
Yeah.
mhm.
So again, to your point, here's the thing with reverse mortgages, key question for someone, if this, who's going to be a good candidate.
Mm-hmm.
If you want to stay in your house long-term,
Mm-hmm.
it's a good thing to learn about.
Mm-hmm.
If you don't want to stay in your house long-term and you're unsure, still a good thing to learn about, but certainly let's talk about all the other options, selling,
Yeah.
taking out a home equity line, and that's all looking at income.
Mm-hmm.
And that's what I do. as a
Because of the
certified
interest,
reverse
because
mortgage
of that,
professional.
because of those costs, those closing
Yeah.
costs, right? So,
So if someone sells a house at 500 grand,
yeah.
2 years later, that's costing them 25 grand
Yep.
in realtor commissions. And then also the
Yeah.
17 they rolled into the loan. So
Mhm.
it just mathematically doesn't make sense.
Yeah. Back to the roof. So we take 10,000 out, we repair the roof, and which is great because now you're adding actually value to the house, right? You're protecting the house, which I think that that's good because I hope it isn't like phantom income. You remember those years, right? Where
Right.
people were just taking money and like
Yeah.
going on vacations and everything. But now you don't have to start paying that interest until you're selling the house or you decease or
That's
your
right.
family sells it. So you could
never
borrow
have
the
a
10.
payment obligation.
Never have a
ever,
payment.
But you can make payments. So if someone comes into an inheritance,
Yeah.
5 years after they take out the reverse and they have a $50,000 reverse balance,
Yeah.
they can pay it off.
Mm-hmm.
There's no penalty to prepay it.
Hmm.
But they're never obligated to make a payment, but they can make a payment.
Can
Well,
they draw? I'm sorry, I'm getting very
No, go
excited
ahead.
that I'm figuring it out. Can they draw from that $250 bank account, so to speak, line of credit to pay taxes and insurance and things like that?
Yeah, we can set aside a portion of the 250 now, just say, depending on age, say 50,000.
Yeah.
So now they only have 200 accessible to them, but the lender sets 50 aside over here and the lender will pay the taxes, property taxes and insurance
Like,
out of that
yeah,
account going forward.
Like a,
It's like how we pay.
It's
yeah.
not an escrow account though, because they're not
Yeah.
sending a payment,
Mhm.
but
Yeah.
they'll set aside money from the line of credit and the bank will send the
Huh.
quarterly tax bill to
Mhm.
town of Pembroke, or wherever they live,
Hmm.
and pay the homeowner's insurance in full annually when that renews out
Mhm.
of that account.
Okay.
So sometimes that's required based on their credit.
Yeah.
Other times people just say, hey, I like the sounds of my house paying my property taxes and insurance, not me.
Mm-hmm.
Because if I ever become incapacitated,
Mm-hmm.
I don't want my kids to be worried about the property charges not being paid and then go into default with the town.
Yeah.
So,
And it is completely different from, I bet that, I'm just guessing my brother-in-law has a different mindset about some of this because I know they're big
Mike?
on, yeah.
actually, Mike's mindset has changed on this. Not for
Really?
everybody. Yeah, they've sent me a bunch of
That's
clients.
good.
Yeah.
Perfect.
I had to do a lot of explaining about the line of credit growth feature. So that's appealing to the financial planning community. If you set up a line of credit for
Mhm.
250,
Yeah.
next year, that 250 is going to be more.
Mm-hmm.
It just always grows because you're aging. A home equity line of credit through a bank, if you go and take out $100,000 line of credit, it's always a ceiling at 100. You can borrow up to the 100, pay it back down, but these grow. So it becomes a financial planning tool. So if someone's 62 and wants to stay in their house long-term, I have people that don't have long-term care insurance and they say, I want to stay here long-term. I have no mortgages. So let's set up this $300,000 reverse equity line of credit. And in 10 or 15 years, that line of credit balance might be $450,000, $500,000.
Mm-hmm.
That can be used for in-home care or long-term care insurance if they don't have a policy. And they can use that money if they have a portfolio
Mm-hmm.
and that suffers losses and they're taking a dividend payment
Mhm.
from that. They can stop drawing from that while it's going south.
Yeah.
Start drawing from the line of credit. That comes out income tax free because it's a loan.
Yeah.
And there's no payment when you use the money. When this recovers the portfolio, they can stop drawing from the line of credit and go back to here. That's what Mike likes about it
Okay.
for his clients. In bad markets, they call and
Yeah.
say, Mike, what's going on? Stop. Let's use the line of credit we set up,
Yeah.
the reverse equity line of credit. So that's the
Give everyone
concept.
a number.
What?
Give everybody the number.
Oh, 781-837-4900 is the number at the studio. Give, I almost said Ben, give Dave,
George.
a call. I don't know who's here tonight. Give George a call and he'll either ask your question for you or he'll pipe you through and we can ask.
Yeah.
But what was my question? I don't know,
Do you have a better understanding now?
I have a better understanding, which made me come up with a question that I would have never come up with before.
Mhm.
And whatever that was. I don't know. Keep
So,
talking.
Let's just say this. We'll stick with the 500,000. You can take half. You have 250. You have it in the bank. You can do different things with it. Let's just say you do the roof. Can you put in a swimming pool?
Yeah.
Okay. So you can do whatever you want. Can you pay for your grandchildren's college?
Yep.
Okay.
It's your money. It's your asset. You're just using a reverse mortgage as a conduit
Okay.
to gain access to equity, which converts to liquid cash.
Then is the bank watching as things like, let's just say a market takes a decrease and things are going down, 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 down. So they're not even paying attention to that?
That insurance fee eliminates liability for the estate,
Okay.
the borrowers, and the
Mhm.
lender.
Okay.
That's why they're expensive.
Mm-hmm.
But when you explain why they're expensive to people, they're like, well, that makes sense. I don't want my kids to be responsible for it.
Yeah.
And the
Mhm.
house is paying HUD that fee, not out of my checkbook.
Yeah.
And my house will appreciate over time, right?
Uh-huh.
After
Yeah.
you take the reverse out. So if it appreciates by the closing costs, it costs you to take the reverse out.
Mm-hmm.
You're never really realizing the loss if you're going to stay in the house long term.
I remember my question. So, so based off your age is how it's determined how much you can take out or whatever, like what you qualify for, right? So is it automatic? Like every year, like, okay, now I qualify for this, or do you have to like refinance or like
Nope.
whatever the new term is for this reverse mortgage? Like, are you just automatically approved for X amount of dollars because based off of your age, or how does that work?
Once it's set up, then it's set up.
Mm-hmm.
If you sell the house, that's a maturity event, meaning the loan gets paid back. If you die, that's a maturity event. That means the loan gets paid back. If you're alive and you leave the house for 12 consecutive months or longer, maybe to a care center, nursing home, the loan gets paid back. To your question, though, you're wondering, okay, the line of credit balance is going up. How is it doing that?
Mhm.
Do I have to refinance to gain access to more equity?
Yeah.
It's automatic.
Okay.
It's organic, basically. And the reason being is if you're 62 years old today and you have a $500,000 house, the LTV in your world, loan to value, in my world, it's principal limit, the amount you can borrow is 50%. And that's HUD's figure.
Mm-hmm.
If you're 70, you can get 60%.
Mm-hmm.
If you're 85 and older, you can get the max 75%.
Mm.
That's the cap.
Mhm.
So if you take it out at 62, next year you're 63, right?
Mhm.
Following year 64. So the credit line is growing because you're aging, and eventual appreciation based on historical data on home appreciation, I think is 3 to 5% according to HUD over the past 100 years. That's why it's growing, but it's always growing. If the home value plummets after you take a reverse mortgage out, this is one of the things that excited me. And you have a $350,000 line of credit and your home value goes from 500 to 350
Mhm.
for whatever reason.
Mhm.
You can call the bank up and say, I'd like all 300.
Mhm.
They can't say, no, I'm sorry, we feel leveraged.
Mhm.
This is going on in the world. They paid a fee to get be able to gain access to that line of credit to HUD and FHA. So that insurance money allows them access, but they have to keep their taxes current, keep the property insured, and flood insurance if applicable. And if they live in a condo, all the condo fees.
I have to tell you, so I really have been talking to a lot of people lately, and I actually had a conversation with somebody today, and she's, in her early 70s, I guess, and still working, gets a very minimal, Social Security, has a small business that she's had for many years. And, she's now, looking for a new space and different things going on. And she isn't at the point where she feels as if she can retire, and she built this great business, but she can't retire because she isn't getting enough. I mean, I feel like she would be a very good candidate for this because she's been in the same house for many, many years. So like, she isn't even a person that I would recommend selling to buy something else because of the costs associated with buying and selling. If you don't have anything liquid, then having this opportunity makes sense.
Yeah. See, people are starting to look at their home now in a different way.
Mm-hmm.
Generations past, the home was a legacy.
Yeah.
It was not to be touched once the mortgage was paid off. But we all include our home and our real estate as part of our net worth, right?
Mm-hmm.
So if you're including it as part of your net worth, there's tools out there. This is one of them.
Mm-hmm.
I like to refer to it as a tool. It's a mortgage, but it's a tool. This is just something to get educated on. The problem is most people won't even learn about it, and it's free. They can call me up on the phone and I'll spend a half an hour with them. I don't charge for that.
Well, can we do a class here one
Yeah,
night and
yeah.
we'll have people in? Because honestly, like Steve Cook, who is from Imperial Inspection Services, we adore him, and we'll have to have him on in the studio to have a show with him too. And he just sent me a text. He's like, great show tonight, very educational.
Yeah.
I think that we should do something here and invite people.
Absolutely.
Because other than me, and I really have talked people out of selling their house. People think that, you're a real estate agent, and like, they'll apologize, like, oh, I'm sorry, I don't want to waste your time. Like, I'm not sure we should do this. We can do this. And I was like, I will be very, very honest if I think you should or you shouldn't. And I have have I not, right? I talk people out of doing it. It just doesn't make sense because there's no place to go.
Yeah. And I've done that too on reverses. I've met with families and I've walked out the door and said a home equity line's a better option for you for whatever reason. Or selling's a better option. I've met with widows that have a 4-bedroom colonial with a 3/4 acre lot with no mortgages on it. And I'd say something like, if you were my mom, I'd probably be convincing you to sell this. Let's downsize because we can take a reverse mortgage out on the next house. It's a little bit different today because I know inventory is different.
Yeah.
And we all say, hey, you can sell this 4-bedroom colonial and let's go find a 1-bedroom, 1-level ranch, which they don't exist, right?
Follow-up question. I'm trying to beat you. Does it matter how long you've been in the house before you can take out a reverse mortgage?
They like you to be in the house 90 days. So if someone buys a new house, right? They want you to establish some residency in it. So 90 days roughly. But we can, if they don't own any other real estate, we can say this is their primary house.
Yeah.
It can be less than 90 days.
So really it's like based off of your age.
Yeah.
Like so how does your like income or anything like that does it come into play? It
does come into play, but it's not the same way a traditional mortgage comes into play. In the traditional mortgage world, you guys know that your loan officers you work with are looking at debt to income ratio.
Yeah.
So monthly income divided into payment, and it needs to be below a certain number. And then that determines how much they can borrow. In my world, it's age and appraised value. That determines the loan amount.
What about health?
Health doesn't matter.
Okay.
Age doesn't matter. There's no If you're 105, you can take a
Mhm.
reverse out. There's no
Okay.
max age. You just have to be 62 or older, has to be a primary residence home. You can take a reverse out.
Oh,
on a
that's what
second
that
home.
was on my question. Is it only a
Or,
primary
yeah,
residence?
primary.
Mhm.
It can be a multifamily though, as long as you occupy one of the units, up
Okay.
to 4-unit
Mhm.
condos that are FHA approved.
Okay.
Yeah, but not second homes or investment properties.
Okay. Let me ask you this, and if it's too personal, that's okay. How many loans do you do a year? Like, are there a lot of people that are very educated, like that do know about this?
Not as many as you would think.
Okay.
How many do I do? I close about 3 a month,
Okay.
which to be honest with you, in my industry, that's and nationwide, that's a superstar reverse mortgage originator.
Okay.
Most people close under 15 a year that do this. That's
Okay.
why they have to do both. And I have an enormous referral network.
Mm-hmm.
I speak 25 times a year, I used to, at
Mhm.
senior centers.
Yeah.
I have multiple financial planner partners that get it.
Yeah.
I've educated them. The problem is if the demographic I serve knew the information we're speaking about tonight, because you can't get this information online,
Yeah.
unfortunately, they would be doing it.
Mm-hmm.
And number two, because of the stigmas of the 60s and 70s, they
Yeah.
won't even take the time to learn about the tool.
And I
that's
bet,
free. It's
yeah,
free.
and I 100% agree that it is probably the stigma that goes along with it, because as you were saying that earlier, I mean, I've been doing this 21 years, and I was part of that, no doc loan when
Yep.
there's going to be that loan officer regardless that's going to do the wrong thing, but it doesn't mean everybody in the industry is doing the wrong thing.
Right.
And like I said, I am very much aligned with you if anybody was ever considering a reverse mortgage, because just like all the other preferred professionals that we use, I know that they're going to be truthful with what is best for our clients. So I definitely, we really would love to follow up and do
Mhm.
something, we can do something here
Yeah.
and have people
a
here,
class,
maybe, do a
absolutely.
class, maybe some Thursday night, and we can have some cheese and crackers and
Yeah.
Yeah.
It's simple.
Yeah.
Absolutely.
mhm.
I have a question about it being FHA. So when we do like a resale and somebody goes for an FHA loan and then the appraiser comes out and there's guidelines that go along with that. Is it the same guidelines? Okay.
Good
Yeah.
question.
Same exact, yeah.
Okay.
Great question.
So-
Same exact standards. The property
Yeah.
needs to meet FHA standards. So if it's got chipping paint, I know
Yeah.
you guys have dealt with that in the
Yeah.
past. The appraisers will deem it as either a safety hazard or not.
Yeah.
If it's chipping paint and it's not a safety hazard, we can set up a repair set aside out of their money, and they give them a year to do the repair of the paint
Okay.
after they do the closing.
Okay.
If it's really bad, cracking a foundation, missing railing, safety hazards have to be fixed before.
What about a septic system?
Well, it's a refinance, so they don't do a Title V. But if the appraiser's walking around the property and see seepage,
Yeah.
they have to make note of that.
Okay.
But they don't go over and it's an appraisal, so
Yeah.
they're there 20, 25
Yeah.
minutes taking pictures, but anything that stands out,
Uh-huh.
they have to take a picture of it, make note of it.
Mhm.
Okay.
So
So let's fast forward. Did you have any other questions about that?
No.
This section?
Mm-mm.
So let's fast forward a little bit. And again, we don't have much time left. This
Right.
went by fast. So Melissa and I can follow up next week about our portion of it. But if you have any questions for David, please feel free to call 781-837-4900. We'd love to hear from you tonight. You can also find us on Facebook. We're on all the Facebook pages and stuff. So you can send us text messages at 781-294-4848. I also, Mark Stiles, who is, he's our go-to attorney as well. Emmanuel Ebot is who my team uses, but everyone at Boston Connect seems to be aligned with someone from
Yeah.
Stiles. doesn't it?
well, I use Styles.
You use Styles
Yeah.
too. Okay. Yeah. They're wonderful over there. Mark is listening. Mark has a show on WATD as well. He's like such a good financial tool to hedge market risk too. Everyone is sweating stock market crash. So that's another good.
Yeah, and so where this would come in, what do we have, about a minute?
5
Five.
minutes left.
So that's why we were talking about Mike
Yeah.
earlier. I'm not going to say his name, but financial planners are now starting to grasp the concept
Yeah.
of helping their clients. If you have a client, when you sit down and do your assessment, they're trying to get your portfolio to last long into retirement, right? So there's always an age, they'll say,
Yeah.
oh, Sharon, looks like your money will last to age
Yeah.
85. But if you complement what you have there and you want to stay in your house long-term, you can complement your portfolio by setting up this reverse equity line of credit, because that's always going to grow. So now you get this new bucket of money. It's a home, but it's equity cash because of the way the mortgage works.
Okay.
You don't have a payment ever,
Okay.
and you're drawing the money out income tax free. So if this portfolio under the stock market crash, it's called the buffer asset strategy, and you're drawing money from that, well, you want
Yeah.
to stop drawing money from that if it's going down. That's why this is set up. It's a safety strategy to start using to help mitigate risk and losses in your portfolio. So this becomes a buffer asset. So if this happens over here, like Mark just said, stock market crashes and you're drawing $2,000 a month from your portfolio, well, stop taking the 2,000 from there. Let's start taking the 2,000 from the line of credit. So you're not missing income. You're just switching the bucket of money you're going into, because this income comes out to you income tax free because it's a loan and there's no payment. So you're not creating a monthly debt by drawing from it.
So let's just, let's say, I'll just use myself as an example. When Mark turned 62 in a few more years, and let's just say we had $100,000 left on our house, but the value of our house is like 700,000. We could take 50% of the 600,000, right? If we owe 100, right? And the
well,
value is 7.
Yeah, you'd get 50% of 700.
Oh, okay.
So
So
350.
350. Then we could take 100 of that 350, pay off the mortgage, still have 250 in that account,
Line of
not
credit.
pay, a line of credit. We don't even have to touch it, but we also don't have to make a mortgage
have
payment,
a
and
mortgage
we just have
payment
to pay
anymore.
taxes.
Yep.
Then why the hell wouldn't I do that?
I'm doing it at 62.
I'm doing it at 62 right now. I mean, whether Mark does it or not, I think that's a
I'm
great
doing it.
idea.
I'm in
Why?
the business. As soon as I turn 62, I'm
It-
54 now.
Yeah, we're not going anywhere. I mean,
Right.
we have made that decision
Yeah.
that this problem of selling this house will be Casey and Mackenzie's, not Sharon and Mark's.
Right.
So why wouldn't we do that? That's like us not having to come up with $100,000 right now. That's almost
right.
like they're paying for one of their semesters at Fairfield.
Right.
I mean, one of their
They are only one of
Yeah.
one of your kids went there.
1 year at Fairfield's for it. So, all right, I
It's-
like
It's a
it.
great tool for people that are in retirement and if they switch their mortgages, if you're 62 and old and you want to stay in your house, switch them and refinance them into a reverse mortgage if you want to stay in the house long term.
Yeah,
And if you want to still keep making payments because income's fine,
yeah,
keep making the payments. It'll behave just like the mortgage you have now. The balance will still go down. But if one person passes away, like we just talked about earlier,
Yeah.
unexpectedly, half the income disappears, you have a reverse mortgage.
yeah,
So you don't have to call the bank and ask for permission for forbearance.
yeah.
You can just say, we have a reverse mortgage, so we don't have to make
Yeah.
payments. We can stop anytime.
Chances are I'm going before Mark, but
I'm sorry if you already answered this, but say, like, could you take out money from it to buy another property?
Yes. You can have,
Oh.
someone lives up here,
no.
right? $700,000 house. They take out 350.
yeah.
They could buy a condo in South Carolina for cash for 150 and have 2 houses without mortgage payments.
Oh my goodness. Can you come back?
Yeah.
All right.
Now we get it.
Now we get it. We'll have really good questions. Thank you, David Tourtillott
Thank you
from
guys for
Homestead
having me.
Thank
Mortgage.
you.
Thank you for dumbing it down for the two of us here. If you have any questions, you can reach us at bostonconnect.com and we will get you David's phone number. We are right at the last seconds here. David, real quick, what's your phone number?
Phone number 617-797-3277. People can also find me on Facebook and Twitter and Instagram and homesteadreversemortgages.com. We have a new website.
Perfect. All right. You can get me at bostonconnect.com. Thank you, everybody. Thanks, George. Thanks for all our listeners. We appreciate you.